All right, we are live. We'll wait till it pops up in the group. In the meantime, we're going to be talking about the 5 investor types. Actually, let me make sure this is live in the group. I don't know if it does it, if it cuts me off in the beginning or not.
Okay.
Yep. All right, we're live. All right, FlipTrader group, welcome to our second Wednesday training. There's 2 trainings on Wednesdays, one with Jan in the morning and one with Brandon in the afternoon. This is a different time. We'll go back to the regularly scheduled time next week. So last week we had a great conversation on just like overall stuff with realtors and how to work with investors and systems and processes. Now we're going to start to drill down on that because our goal, like we talked about this morning, is we've got to have bite-sized information that we can take every single time we go to one of these little trainings or a seminar. We've got to be able to take something and take action on it. So our goal now is Brandon's going to give you the 5 investor types, how to find them, how to work with them, how to keep them, because investors will switch real fast if you're not adding value, and anything else around that. And then we'll get back on and we'll do a little banter, have some fun, and wrap it.
Sounds good. Awesome.
Yeah, man. So I will monitor the Facebook group and you can go to town.
Sounds good. All right, Ian, thanks, man. Welcome to the show, everyone. My name is Brandon Louder. I represent a big team in the Los Angeles area in real estate. Been an investor myself and work with tons of investors. And I actually teach a 2-day designation called the Certified Investor Agent Specialist. I teach agents how to work better and bring value to their investors in the real estate world. And like Ian said, today's topic is the 5 investor types. So we're going to kind of roll through this, give you some definitions of each of the different investor types as we go along the way. But it's real simple. For those of us that are out there working with investors, those of us that are out there trying to work deals, I would say the most common investor type that I'm going to start with today is the rehab and resell investor. I would say, Ian, you tell me if I'm wrong, but that's predominantly our channel at this point. Right. So our channel is full of a lot of flip investors, and I get that. But I guarantee you there's probably people watching that missed out on an opportunity, and it's probably because they're not thinking in the terms that we're going to talk about. So the first investor type, really, believe it or not, is the first-time investor. And again, I'm going out on a limb, and I'm gonna venture out and say that everyone on this channel was a first-time investor at some point, right? So the dynamics of the first-time investor is obviously they've never purchased an investment property before. But here's why it's important to understand this type. This type of investor can easily be overwhelmed with information. So if they don't have any experience and they're learning the ropes, they're probably a little more reluctant and hesitant, but they're definitely interested in it, right? So when we're overwhelming this investor type, they have a tendency to shy away. But this could probably be the most important investor type of them all. And the primary reasons the first-time investor is the most important is because if you do them a favor, they have a great experience, they understand it, they build confidence, they go a year or two and they really reap the benefits of being an investor, meaning they understand the profitability, maybe they understood the cash flow, maybe they understood, more importantly, some of the tax benefits. What's really cool about them is they move into the next investor type, which is what we call a portfolio investor. And this characteristic is pretty easy and should make sense, right? But a portfolio investor is someone who owns 2 or more investment properties. Now, most first-time investors typically do a buy and hold scenario. They're not necessarily in the rehab resale world. But what's cool about a portfolio investor is that means they've had a taste of investing in real estate. Hopefully they've had great experiences and they want more. Maybe they understand the dynamics of wealth building. Maybe they understand the dynamics from an accounting perspective, and they want to learn how to leverage their portfolio or get diverse in their portfolio. So a portfolio investor is not the same as a rehab and resale investor, because the rehab and resale investor, their primary goal is to turn properties as quickly as they can for a profit to get some type of an annualized return, right? So keep that in mind. So our goal here, right? First time investor, how do we get them into being a portfolio investor? And that's through good, consistent value propositions, good experiences when it comes to investing in real estate. Something we teach in the CIS is the responsible investor approach, not necessarily the high risk approach. So you got a first time investor that hopefully rolls into a portfolio investor, and then a little known investor that's out there is a move up or a move down investor. And the characteristics of a move up or move down investor, a move up investor would be someone who maybe now wants to up their game as far as overall property values. Maybe they want more doors. Maybe they want a bigger building. Maybe they want more cash flow, but they're taking that smaller or first step investment approach, and now they want to move up. One of the greatest wealth building strategies out there for younger investors, as an example, is what we call the 5x5 model. And that's you move up every 5 years and you don't touch your equity, you don't touch anything. You just constantly returning that equity every 5 years into a move up property. The move down investor is very similar. What's cool about a move down investor is they probably have a ton of equity and they're more willing to diversify into other real estate investing opportunities. And then the fourth investor is who we call the performance investor. And the characteristics of a performance investor means they probably purchase at least one investment property per year. They typically have a high net worth. They're highly motivated. They're highly experienced. And they probably have really refined investment goals. And they're probably very diverse. It's not just in real estate. They might have Bitcoin and stocks and bonds, but they're very, very refined when it comes to it. What's cool about a performance investor is you may never do business with a performance investor, but a performance investor can refer you business because a performance investor becomes that magnet. Everybody wants to be like them. Everybody wants to know how to grow their portfolio or have diversity when it comes to their investment properties, and they want to learn from the performance investor. So they're a magnet. In all the years that I've been doing this, I've really never sold any investment opportunities to a performance investor. And how I've leveraged our performance investors is I send them an opportunity with all of the numbers and I say, hey, what do you think? And more times than not, they give me some feedback, which I learn from and I appreciate and I respect. But then they probably say, hey, it's not for me, but I know one or two people that this might be good for, which is awesome. And then the fifth, we kind of started with this, the rehab and resale investor, which is most of our audience. And that's, what do we know about the rehab and resale investor? They should be purchasing property every 6 months or fewer. Hopefully they're highly experienced, but they're typically not interested in the buy and hold scenario. So why are all five of these investor types critical, at least for our business? I think it's awesome because we look at real estate as every residential real estate has potential for return. It's what is the potential for return. So as an example, if you only specialize with the flip or the rehab and resale investor, you probably don't necessarily look at all of the other numbers where that property could have potential for a first-time investor or a portfolio investor, as an example. And so I think what's cool about how we're growing this channel, Ian, what you're throwing into this is if we can start looking at every piece of property as an opportunity and teach you guys how to scrub a property so that you can understand what its rate of return might look like, the question then becomes, do you have an investor that you can sell that property to or bring that opportunity to them? That's what I think is really cool about where we can ultimately go with our businesses, because not every fix and flip house is the right fit for the right, maybe fix and flip investor that you have. So that's kind of the short and sweet of it. And I don't know if you want to expand on that, Ian.
Yeah.
You.
Yeah, we should. Like I told everybody this morning, everybody that comes on here to teach and train is at the top of their game. So the information that they filter or percolate down to the group is going to be real fast. And now we can start to break it apart. Or, we can't know what everybody needs. So these 5 investor types, now what people can do is come into this live, come into the group and tag Brandon and say, hey man, I help the first investor type. how do I start finding and helping the third investor type, or how do I help them move up or move in? Then the other thing I want to break those down a little bit more, but I really want to ask you, break down the responsible versus the high risk approach a little bit more. And I want agents and other people out there to really understand, where do they sit? Do they sit on more of the high risk approach, or are they more of the responsible approach? And then what's the value proposition behind both of them?
Yeah. So I think there's a lot to be said about, the differences between those things. So if you take the 5 investor types that we just described, we have people in the audience that might be doing fix and flip, or maybe they're, wholesaling, maybe they're doing some note trading. The question that I have first and foremost is, what formal training have you had? And is it all just, street smarts, or is there some book smarts to it? And the reason that's important is I've learned that most of my experience has been street related. And it wasn't until later in my career that I started getting book smart. And why that's important is, if you have the opportunity to meet somebody that does real estate investing at a high level, they're going to sniff you out if you have no experience and you don't speak their language, as an example. So just even in the presentation, Ian, someone sends an email out that they've got a deal.
Yeah.
I get those every day.
Yep,
and just because of the email, I'm sizing up the level of professionalism from that person. And so to me, because they're lacking professionalism in how they present, that to me is risk.
Yeah.
So the risk is the person who's providing me the opportunity, they might not have done their homework, or maybe they fudged on the numbers to make it look more attractive.
Yeah.
And to me, that's not being responsible.
Interesting. Very interesting.
Right.
So like we talked about with Marino on Monday, marketing is key. And if you take the old expression like first impressions matter, or whatever it might be, then the people that are seeing your email for the first time, and I used to tell this to sellers all the time, and I know you and I share this very similar thought process. If your pictures suck, if you took them on your iPhone, if your photographer that you hired, thinking you're doing a professional job, sucks at taking pictures, doesn't understand how to conceptualize, doesn't understand angles or lighting, the first thing they see, they're going to judge you, because they don't know anything about you, especially if your investor list is, you go and buy a buyer's list from some VA or something.
Yep.
I think that's a great point. And it's so small, just to go on Canva and make a template that makes you look really pro. That takes 10 minutes.
Yeah. Yeah. 100%. And I know I use the dating analogy a lot in our business. And what you just said brings up another point. And I would say, if your property scrubbing, the properties and the deals you find, if your presentation, right, is not good, then it's probably why you're on eHarmony not getting any phone calls. Right. Because at the end of the day, I would think, if I was in the dating world, I would want my best photo. I would talk about my best qualities, because I want the phone to ring.
Right.
And you're right. So what is the value you're bringing, right? We talked about that last episode. Well, if I'm turned off, if you send me a deal and I'm turned off just because of the presentation, like, that's a missed opportunity for you.
Huge.
Right. And so I think, again, back to that level of responsibility, I think the responsibility is if I feel like you have vested in the quality, then it's probably a pretty good deal and I'm interested.
Yeah. Right? Well, the other thing is, it's not just about the presentation, although that has a lot to do with it. I think that your responsibility, like you're talking about, to the public that you're going to serve, is to present yourself in the best light. And maybe even more importantly, you must be responsible with your education and training to make sure that the numbers are right according to you. Not like you're just strict opinion. I mean, numbers don't lie. Comps don't lie. It is what it is. Maybe in LA, it's way harder to comp, which I don't understand how people comp in LA. It's very weird. Even the address is like, they don't go every other, one is every other number on odd and even side. They're like, they jump by 10 sometimes. And you're like, how the heck? But, like, really, like in your course, really digging in to understand how to build a system to run the numbers really effectively, know how to walk somebody through that. If somebody goes, yeah, I like these numbers, but can you explain this to me? The responsible part is, yes, of course I can. And I'll take you through exactly how I came up with these numbers so that this investor trusts you, because everything that we're talking about here with our 4 L's, right? FlipTrader is helping you level up your life, your learning, your leverage, and your legacy. The
Yep.
systems are leverage. This right here is leverage and learning. And when we talk about legacy, we want to build a sustainable legacy, just like we want to build a sustainable business. And if we're just kind of throwing stuff out there and trying to guess or hope it sticks, that's not going to build loyalty or sustainability for that client. So just those two things alone are important as hell.
And just on that same time, we have a tendency to say, gee, everybody's a bunch of idiots because they didn't take the deal. When the reality is maybe you didn't present it to the right people in the right way or to the right investor type. So you missed the opportunity. And sometimes we have a hard time looking in the mirror, right?
Yeah.
So along the same lines, being that responsible person, well, if I've identified an opportunity and I truly understand the numbers, the performance investor is going to look at a completely different as the first time investor.
Yeah.
So how does the responsibility, or how do we become more responsible in our presentation? Well, if we understand that the first time investor is a little more conservative, maybe reserved, cautious, then we definitely don't want to give them numbers that are not accurate, right? The performance investor can be hit or miss because they already understand the game. They already understand that maybe there's future upside on the numbers. So, I get what your numbers are. So I think the approach is what we're talking about here. If you just really understand your audience a little better, you can take the same property and present it 5 different ways to 5 different people because it makes sense to them.
Right.
Right.
That's responsible.
That's responsible. Because if you're creating the work for me, so Ian, you send me the deal, and I'm recognizing that you're not sending me deals that make sense to me, the credibility goes out the window. But what I'm saying is, when it comes to the responsibility, well, if you're trying to grow your business with investors, part of that responsibility is understanding what it is I'm looking for and only presenting me things that make sense to me.
Yeah, I had an investor once, old Southern guy. He said to me, and this is how I learned this exact thing. He said to me, I need you to be a hound dog and sniff out the animal, but I also need you to kill and clean the animal and make it ready for dinner. And I said, okay. He goes, if you send me property, I'm not a hunter, but this is the analogy he gave me, and it really stuck with me. He said, if you send me property and I got to do the work, all you are is a hound dog, and I can go right down the street and find hound dogs looking to point me in the right direction.
Yep.
But it's the like, I want the agent that can do everything for me, and I'll stay loyal. And they did. And it's a lot of work, but again, we built systems around it. We built automation around it, and we built different investor profiles. We built exactly how to do it for this investor. This is his disc model. This is how he wants information, or she. This is how you communicate with them. Like, we built all that stuff out. And yes, it took a lot of time. However, it created sustainability. And I mean, if I ran it today, I'm sure I'd run it a lot different than I did back then, because I know a lot more today. However, it was a really cool system that worked. Now, the other thing I want to ask you is, with the move up and move down buyer.
Yeah.
Can that also incorporate, because there are a lot of agents in this group, and I want to make sure that agents understand that your seller can be a move up buyer in retail, and they could be a move up buyer in the fact that they're selling a house. They got a ton of equity. What are they doing with that? Are you asking them what they're doing with that? And then, like, your sellers in the retail space can become your investors, and you can teach them. They're probably first time investors, but would you call them a move up or just a first time investor?
So the move up investor or the move down investor, they only count being categorized that way is if they keep their property as a rental.
Got it. Okay.
So otherwise, they're just selling something and finding a replacement, which I understand. The key to this is understanding the math, meaning you're in a $500,000 property right now that you bought for $300,000, and maybe you've got a 3% rate. That's fine. If I were to sit down and show you in math, if you kept the property but pulled equity out, what does that look like from a cash flow perspective? So now you've got an income producing property,
Right.
but you bought $1 million property. That step up in appreciation far outweighs what it cost you to refinance that house, even if you went to a 7.5% interest rate.
Right.
And so the whole idea in the move up strategy or move down strategy is not only to keep cash flow, but it's to step up your basis or step up your overall rate of return because you bought a more expensive property. So again, I mean, just simple math. Let's just say 5% a year appreciation on a $500,000 home is 25 grand, but on $1 million home, it's 50. So where did you make more money? Obviously on the $1 million home.
Right. And there's more risk involved, and there's more out of pocket, and there's a lot of other factors in there. So how does somebody get started? Like, let's say we've got some people that just aren't they haven't really done this before. Maybe they've done a couple deals and they just kind of got them randomly, or they get the emails from wholesalers and they just got lucky and they sent it out. How can somebody really start to systematize their business so they can have that sustainability? And the other side of that is, where are people going to find these different 5 investor types?
So they're already in your sphere in your database. You just don't know it because maybe you've not even, presented it, right? What we found in our own database was not just people that had equity, but people that had retirement accounts that are only making 3.5% interest, right? And they maybe don't feel very comfortable about the banking world right now or whatever. Real estate investing is still, depending on your exit strategy, right? There's nothing wrong with it.
Yeah.
So the question I've been asking people lately is, so Ian, if you could go back 5 years ago and buy real estate, would you? And
Yeah, of course.
right. Well, if we fast forward 5 years from now, what do you think we're going to be talking about?
Right. Yeah.
So,
I wish I would have.
right. So, and I think we're pretty connected. And again, we can't predict the future. But whatever's going on in the market today is not what happened in 2007. It's just not. So people are thinking there's going to be this crash or whatever. And listen, to me, buying property responsibly and the right way based on your stated goals, it's never going to change no matter what's going on with interest rates or what's going on in the economy, right? So I think that we've had a real easy market, and we have to learn how to work a little bit harder, which means, to your point, how do I bring people? How do I create my own market? Well, you create your own market by introducing opportunity to everybody, but you need to understand the investor type. So this is how easy it could be. Let's say you have 100 people in your database. You could simply say, listen, I learned something really cool today, that there are 5 investor types. There's a first time investor, there's a move up investor, there's a portfolio investor, there's a performance investor, and a rehab and resale investor. If you could be a real estate investor, Ian, which one of the 5 would you like to be? It could be just that simple to ask your sphere.
Yeah.
Right.
I thought you were asking me. I feel like I want to be a performance investor.
But the point I was trying to make is some people don't know where to start, or they feel like they got to call their database and interrogate them.
Right.
And I don't think that you need to do that. And so to me, it's as simple as saying, listen, have you ever felt like you're missing out on a real estate investment opportunity? That, to me, is how you start a conversation. And now if you understand the 5 types and you, Ian, say, well, I own my own home, but I don't have an income property.
Yeah.
Well, you're a first-time investor. And so my question to you would be, how have you ever considered building wealth? Are you worried about your retirement? Are you worried? That's where I'm going to go with the conversation.
Yeah.
Even if I'm a wholesaler and I got a property tied up, why could I not have that same conversation with somebody in my sphere and not necessarily talk about the flip aspect?
Sure. You totally could. That's
Right.
a great point. Even as a wholesaler, you can still have that conversation to be building your list in a very specific way.
So, and there's, I'm just guessing, but there's a high probability on our channel that most of the folks, even the real estate agents, traditionally for the last 7 years, only think and flip. So everybody's competing in the same space. And back to my earlier point, you don't even realize what you're missing because you don't even understand all of the potential
Right.
returns a property could have outside of just rehab.
Well, they're thinking about probably flip and like burr strategy because they're buzzwords and very popular in today's real estate investing culture.
Yep.
But like this weekend up at our launch party in Boston, I was having conversations with guys that have been doing it in this segment for a very long time, and now they're expanding into this additional segment. Like one of our guys, Ruben, he's going to be on here, and he started in the short term space. Then he went to the midterm rental space, and now he's in the midterm insurance rental space, which is like, oh, I didn't even know the space could expand like that.
Right.
And so, his type of lead gen in the beginning was like rental arbitrage and subleasing and things like that. Whereas now his lead generation is anybody with a house that's looking to hold on to it and grab the equity and move out and keep it furnished.
Sure.
And the insurance companies will pay big money to relocate a family for 6 months or a year while their house is, being fixed with fire damage or water or whatever it is, or being rebuilt. So how does somebody pivot? Like if they're in fix and flip now and their market's getting saturated, like Austin, Texas is a very different type of market right now. How do they pivot and then go out and pitch that to their database?
I think the first thing to do is again understand the product, so the property, and do I even know how to run buy and hold numbers on a property, or do I only know how to do ARV and whatever, right? I mean, at the end of the day, I think you got to understand the math. So maybe I didn't explain this very well, but when I said every property has the potential for return, I genuinely mean it. So I'll give you an example. Let's just say someone here does a really good job marketing for off-market ugly houses.
Yeah.
And 99% of what you're hoping for is that you find an investor who wants to flip it, right? That's predominantly what it is. Well, I'm sure you're getting phone calls and responses to your ads, and those properties aren't as ugly as your investors want them to be.
Right.
So you walk away from it, is the point I'm trying to make. And that just means you haven't looked at the property in a different way to find and offer it to the first time investor, because the first time investor isn't necessarily really wanting to do a fix and flip. That's higher risk.
Yeah.
They don't have the experience, but they're definitely interested in owning their first investment property, especially if it puts a couple $100 a month in their pocket and it's paying for itself, right? That's the cash flow we were talking about.
Yeah.
And so what our team learned how to do literally was, here's a property, here's its condition, what kind of return number could we get for it? And then do we have a buyer for it? That's what it boiled down to.
Sure.
And I think if we could teach your audience that every property is an opportunity, their volume of business scales. And then it goes back to what you were saying earlier, is do they have the systems in place to have it scale, and can they manage it and still be responsible?
Yeah, 100%. And the level of your systems is insane. And just remember, guys, this is not like these are like Brandon's not coming on here to pitch. He's teaching. I'm pitching a little bit, and or not pitching. I'm bragging about Brandon's his training, because like I don't think I've ever seen something so detailed. And I've sat in a lot of RIAs and I've sat in a lot of presentations for multifamily and shopping centers, things like that. And dude, the level of detail that you go into is really amazing. And like in the CIS course alone, the level of detail is amazing. Forget about the other courses.
Sure.
And so if somebody is interested and they're like, I want to get started, or I want to shift gears, or I want to get better at what I do, you got to get the right training. So step one is you're here. Step two is, well, where's the gap? And who's the person that can fill that gap as an expert level? Because you either can do it on your own and learn by mistakes, which is money, costs you money to make mistakes, or you can learn by somebody else's mistakes and it won't cost you as much money, especially in like, a couple $100 versus $50,000 or something crazy.
Sure. Yeah. Well, and I think back to that, I know we're kind of hitting the word responsible.
Yeah.
I think another responsibility that we have is that we know what's going on in the industry and the market well
Yeah.
enough to also be a good advisor.
Yeah.
Right. And I think it's very easy for us to like figure something out and get good at it. And then we don't realize something changed. And then we have to react. It's nice to be able to anticipate. And the best way to do it is exactly what you said is we're all connected. We're all on the same ship. Nobody needs to worry about taking 100% of the market. That's not going to happen.
No.
But how can we all grow better together? Because we do need it. We need the community. We need the support, the training. We need to know, hey, something's changed and we need to change our strategy, our tactic, right?
Yeah, 100%.
Yeah.
I mean, like I'm changing my tactic. I had some success. I had failures with my single family and small multifamily game back, years ago. And now as I rebuild the portfolio and I buy new stuff, like the circle that I hang out in is in hotels and short-term rentals and midterm rentals.
Right.
There isn't a lot of like really close friends of mine that are doing a lot of flipping. Maybe Aaron Amuchastegi, who was on yesterday, and he'll be on tomorrow doing a full training on buying foreclosures. But like everybody, the conversations I'm in are about hotels and conversions and hospitality, which I've really never, I've thought about before, but I've never really gotten into it. So now I'm like really interested in it. I'm researching and I'm doing all these things to figure out, well, where's my talent lie there? Is it in analyzing properties? Not really. Is it in managing and operations? Yeah. Is it in building teams? Yeah. Do I like hospitality? Yeah. I like systems and processes better. So if we can figure out a way to systematize, it's great. Yep. So the other thing I want to encourage people to do is make sure that the circles that you are running in are people that are either doing way more than you are and you're learning from them, or they're shifting your mindset to focus on something that maybe you're more interested in or you can shift to. And that's a great place. FlipTrader is a great place to find people who are doing the same stuff or something different. That's why every week we're bringing on, I mean, obviously you and Jan and Marina are the same every week, but like we're bringing on the different people who are just executing at a real high level for everybody to learn something different. And it's freaking awesome.
Yeah, it is. It's amazing. And again, I still learn but I intentionally learn. In other words, I don't necessarily always want to learn from my mistakes. I really want to be genuinely curious about what is not only going on, but I'm all about where's the demand?
Right.
What are people looking for? Can I find it? And can I make them so happy that they brag about it and send me more business? That's really what it boils down to.
That's Team Echo. It's Team Echo.
That's Team Echo, man. Yeah, it's cool. So, and I know, there's a lot of us, right, that not only don't mind sharing, but I think even in, I don't want to put words in your mouth, but I think you're seeking, like I'm seeking, other people that have experiences that they can share for us to continue to grow and learn, right?
Yeah, I mean, I don't sit on here as a host or the manager of this group, like, and play Candy Crush while everybody's on here. I'm learning too. So when I went out to find our core group of trainers and affiliate partners or like group experts, I wanted to learn from these people, because if I wanted to learn, then I know other people are going to want to learn. And if they have something interesting that I'm interested in, it will show in the way that I present them or promote them or whatever it might be. So yeah, dude, I'm learning on every one of these. The cool part is I'm on every single one of these calls. So I'm learning, like I am exponentially learning now. I have like 5 hours of content a week that we're doing just in here. So I have 5 more hours every week that I'm learning something new, and it's awesome.
Yeah, I love it. I love that too. So do you think it changes as you get older? You want more or not?
I think it it's definitely an evolution. I think like when I turned 40, I just said to myself, okay, it's time to stop being okay with so many mistakes. It's time to stop like being so fast to make decisions and be okay with like these high levels of risk. You got a family, with kids that are getting older. You got a lot of responsibility in other businesses. You've got a talent that could be used, and you got to like focus and slow down a little bit and really make sure that there's more intentionality. So I think the stuff that I learned today is like, it's way more intentional than cramming in a bunch of stuff. Like, all right, I read 4 audibles this week and I'm doing 8 this month. Like, I'll spend a month on one audible now, just maybe a couple chapters a week, if that.
Right.
Or like this kind of stuff. I'm being very intentional with who I spend my time with for those 5 or 6 hours during the week. I want to be able to benefit from it. Maybe that's selfish, but like, I'm on here with them. I don't want to be bored. I don't want the audience to be bored. I want to be able to learn from them. So yeah, dude, I'm much more intentional with my learning. And I've always been very curious about like learning and had that thirst for knowledge. But I think it's just, I think it's amplified now.
So what could we do to help the audience with better understanding some of the things they might want to learn rather than us maybe assuming what they need to learn?
Well, once the team gets up and rolling next week, the team will be in here asking questions of the group as we do our promotion for your stuff and Jan and Marina and the other group experts. Like, we're going to be putting up some polls and the audience will be driving what information we give them. So we're kicking it off because we take action. You know what I mean? We have ideas and we take action.
Yep.
And the audience is going to start to, funnel down what they want to learn from us, which is great.
I think last time we talked about new car syndrome.
Yeah.
So now if you understand the 5 investor types, everyone you talk to now, you're going to be able to categorize them.
Yeah.
And all I'm saying, the beauty of that is if you understand, again, your audience, that means the conversation you're having is specific to that. To me, that's how you grow your business. Right. And I think the investor space is a huge opportunity for us all to continue to learn. And I think there's a ton of people out there who really, really want to work with people who know what they're doing.
Yeah. And who are genuine and authentic and actually care and actually add real value.
Yep.
The other thing that I want to incorporate here is something that I found very powerful when analyzing, ideal client avatar or mapping out like a dating profile for each type of client is the DISC model. It's very simple. If everybody watching doesn't know the DISC model, we'll drop a link in DISC. Just go Google it and you'll see the different types of people. And it's very simple because it's only 4. Like earlier today, I was on a call with somebody and I just said, all right, okay, hang on. Do you know the DISC model? And he goes, yeah. And I said, which one do you think I am? And he goes, oh, you're a high D. And I said, great, get to the point.
Right.
He's like, oh, thank you. So, like, I don't want to sit here and I'm already in, dude. I'm already in. You don't have to sell me. You don't have to run me anymore. If I can get off this call with 15 minutes and go pee and chill, like I'm back to back, like read the room.
Yep.
And he's like, dude, my apologies. I should have picked up on that. And you're right. And so when you're dealing with people, especially different, now you got 5 avatars of a potential investor with 4 different DISC avatars, which are exponential too, because you could be a DI, a DS, an IS, an IC. Just those 2 alone will help you narrow your competition because you'll understand how to speak and communicate with this person and you'll understand what they want and you can build your strategy around that.
Well, and I think the key to what you said is just better understand, right? So let's say I find an opportunity that's a fix and flip.
Yeah.
And you're a high D, you just want to see the numbers.
That's it.
But if you're a high C, you want to know where the seller's going. You want to know why they're leaving. You want to know, you know what I mean?
Yeah.
But that to me is how you change your presentation, because if I know you're a high C, I'm going to give you that information too, because it's important.
Right.
Yeah.
Right.
Yeah. Very cool.
Well, this is awesome, dude. Another good one in the books.
Yeah, man. This is awesome. I love what you're doing. And
thanks, man.
I'm excited for your audience. So
I want you to drop your link for CIAS in the chat on this because I want people to just see it. I want people to have the opportunity to, that's what I have all of our group experts do. And again, it's not to pitch you. It's not to sell you. It's just to give you the opportunity that if you need more, if something that Brandon or one of our other group experts said that resonates with you, you have the opportunity to take it even farther if you want to. And if not, show up here for the next 5 years and just download the free. But if you need something more, we want to be that authority for you that says, hey, we vetted everybody that comes in here. We're getting rid of all the spammers. We're getting rid of anybody that's pitching anything that I haven't vetted. And the only people that are going to present you with information are the people that have gone through a very rigorous background. And they've been on a phone call with me for literally hours at a time with me peppering them with questions so that I know we have a standard that's maintained in this group. Brandon and I have known each other for a long time. He's already been peppered with questions for years from me. So Brandon passed the test before we even started this group.
Well, we've been on the journey together, and so
yeah.
And I think it's cool that we're learning and we want to share it with everybody. So that's awesome.
Yeah, and it's genuine, man. I want everybody to learn. We want to be the leading authority of real estate agent and investor training and education. That's what we're very quickly becoming. Yep. So it's exciting. Appreciate you being here again, man. We'll see you next Wednesday. Next Wednesday is at 2 p.m. Eastern.
So that's 11 a.m. my time. And right. I'll email you a couple of the topics. You just pick which one you want and we'll let everybody know, and we'll keep the train rolling down the track.
Yep, absolutely. All right, FlipTrader group, we appreciate you. Thanks for being here again. We had a lot of people in this call. Again, drop your comments or questions in for Brandon. I'll be monitoring every single one of these posts and lives. Brandon will jump in here and monitor all the Wednesdays. So if you need something, let us know. We'll drop Brandon's link in to find out more about what he's doing so you can get more. And appreciate you being here. We'll catch you on the next one.
All right, buddy. I'll see you next one.
See ya.